Welcome back, viewers, to Investor Diaries. In this video, we are going to compare the stock performance of two companies that are seemingly similar, that's Visa and Mastercard. We'll try to break down the stock for you, and then we'll try to come up with a recommendation on which stock seems to be a more favorable investment at this point of time. In the past few weeks, we've received requests from our viewers asking us to do videos comparing the stock performance of a few companies. So this is the first of that series. As always, if you have feedback or if you have any suggestions, please feel free to leave it in the comment section below. And please subscribe to our channel, it really helps us. So without further ado, let's get right into it. So before we start comparing, let's try to understand the impact that Visa and Mastercard have on the global payment industry. So together, they run as a duopoly because they control more than 90% of the global credit card and the debit card market. Now that's a huge number. And let's face it, digital payments is not going anywhere. In fact, year after year, it's surging. The pandemic has only increased the use of digital payments across the world. There are very few industries that operate with such high barriers to entry, which means that investors can get involved with a decent level of confidence about each company's revenue streams, margins, profit, both now and in the future. Cash and check continue to trend downwards in terms of method of payment, while the threat from cryptocurrencies has not really materialized in any kind of form compared to what the hype suggested a couple of years back. Yes, you might argue that there's been some challenge from contactless payments through Amazon or Apple Pay or other similar mobile wallets as an alternate payment. However, we are yet to see a very wide scale adoption of any of these. And in my personal view, it will take many more years to reach full market saturation. Throughout the world, there is still a lot of payments that are being made through cash, and that's why there is plenty of room for Visa and MasterCard to grow. So all in all, Visa and MasterCard's position as industry titans is fairly secure. In terms of market capitalization, Visa stands at $420 billion and it's ahead than MasterCard's $332 billion. They both kind of offer similar dividend yield. Visa offers 0.61%, MasterCard offers 0.48%. So if everything about these two companies are the same, which one should you buy? So let's look at Visa first. Visa, it's a global payments industry leader. It's got presence in over 200 countries. And it couldn't escape the COVID-19 led weakness in transactions, posted a 17% decline in revenue of $4.8 billion for the third quarter of fiscal 2020, which ended in June 30th. Visa recently reported a 7% year-on-year rise in its August US payments volume, which was slower than the 8% growth in July. It reflects the impact of the expiry of the elevated unemployment benefits that's going on in the United States. Meanwhile, global processed transactions grew 3% in August compared to about 1% in July due to accelerating domestic transactions triggered by the easing of social distancing restrictions and norms across the globe. Cross-border volume, which excludes the Europe transactions, was down about 43% in August compared to 44% in July. Meanwhile, Visa is capturing the demand for contactless payments amidst the COVID-19 outbreak through its tap-to-pay solutions. In the US alone, Visa added over 80 million contactless cards in the first 6 months of the year. And it expects tap-to-pay to accelerate post-COVID-19 when consumers say start going back to the office and conduct similar transactions for their daily use, such as say commute, pay transit fares, buy lunch, buy food, buy drinks, so on and so forth. In January, Visa announced a $5.3 billion agreement to acquire the fintech Plaid. which has products that enable consumers to share their financial information with many apps and services such as Acons, Betterment, Chime, TransferWise, and Venmo. Now that we've looked at Visa, let's look at MasterCard. MasterCard has a presence in over 210 countries and serves customers through 2.2 billion MasterCard branded cards and 417 million Mastro cards. COVID 19's impact on consumer spending reflected in the company's Q2 revenue, which declined 19% year on year to 3.3 billion and led to a 28% decline in the adjusted EPS to $1.36. However, one positive aspect in the second quarter was the 12% rise in other revenues to $1.1 billion due to the growth in the company's cyber and intelligence as well as data and service solutions. Now, as per the MasterCard's Q3 business update, the company is experiencing continued to moderate improvements. Notably, switched transactions, which reflects the number of transactions initiated, authorized, cleared, and settled through the MasterCard network, grew 5% in the week ending 28th of August compared to 3% in the week ending 21st of July. Cross-border volume was down 35% for the week ending 28th of August compared to a 40% decline in the week ending July 21st. So as you saw in this analysis that we just concluded, it seems that both of them are fairly similar companies. Their products are fairly similar. They operate in similar geographies. Their clienteles are pretty much the same. So how do we analyze these two stocks? What do the numbers tell us? Is there something which can help us determine whether a company has been on an upsurge in momentum or there is a company which is lacking in innovation? Currently, MasterCard is trading at a price to earnings multiple of 46, whereas Visa is trading at 38. So what do these numbers really mean? It implies that you'll pay about $46 for each dollar of MasterCard earnings versus $38 for each dollar of Visa's earnings. This makes MasterCard roughly 21% more expensive than Visa. However, is this extra money worth it? Let's look deeper. MasterCard's net margin for the last 3 years averaged 39% versus 46% for Visa. So far, from what we've seen in terms of, say, EPS or net margin, Visa definitely looks better given that you'll pay less money for better margin. However, let's look at some other parameters, starting with operating margin. The story is the same here. 53% for MasterCard, whereas 62% for Visa over the last 3 years. So is Visa a really better investment? Let's discuss more. We haven't considered growth as yet. MasterCard's average annual revenue growth between 2015 to 2019 was about 15%, whereas it was about 13% for Visa. However, growth in the last 2 years, let's look at that. MasterCard has accelerated its growth to 16.3% in the last 2 years, while Visa has slowed it down to 11.8%. Probably this is one of the reasons why the market is pricing MasterCard higher. So I think the story of the last 2 years was really critical in determining why MasterCard seems to be slightly more expensive than that of Visa. What's the real reason behind it? MasterCard clearly has been on an upward swing over the last 2 years. So I would say this, if your outlook is relatively short term, then go for MasterCard. It clearly has the momentum to actually drive the stock price forward. However, don't count out Visa as yet. So if you're thinking about this being a very long-term investment for you, say about 5 years, 7 years, so on and so forth, then buy Visa stock. Visa stock is clearly trading at a discount when I compare it to MasterCard. So this is it, folks. I hope you found some value in this analysis of Visa versus MasterCard stocks. I hope you liked the content. Please feel free to leave your thoughts in the comment section below, and I hope to see you next time. Thank you so much.